Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, January 20th, 2009. As we get into today's intraday video, folks, I want to just discuss a couple pattern recognition type stuff that we're going to do for the educational group out there. And then we'll talk a little bit about what the market's doing, what the inauguration had the effect on the market of, how did that kind of play into today's activity in the overall market today. For the most part, you've seen a pretty hard sell-off across the board as the Dow is down about 167 points, the Nasdaq down 55, and the S&P down about 25. And you are getting a little bit of a bounce as you're looking at the intraday SPY chart right here, but it's again near the lows, and the question has to be looked at as is just a little bounce before new lows are tested or new lows are made. Ultimately, you have to be watching this point from last Thursday, which was the lows from last Thursday before that monster reversal, which could be in play if we break down from these current levels. All right, so we're going to go over a bunch of these little patterns in the charts, and also take a look at the various activity on the 60-minute as well as the 10-minute on this intraday video. Volume today is pretty strong. You've done about 1.5 million contracts, and it's only about 1:30 p.m. Eastern time here. And again, you are looking for whether or not you can hold these key lows that we were coming down to from mid last week and late last week. Now, today we had the inauguration. That's the big deal today. We had that Obama being sworn in as president. You did not really see much of an effect, except really you had a little bit of a bounce a half an hour prior to him getting sworn in. Right around here, you had a little bit of an uptick, and then once he really got sworn in, the markets actually fell. This candle was right after 12 o'clock here, and you started to see a little bit of a sell-off in the market. So other than that, you didn't see much more of an Obama effect, which oftentimes you see a push up in the markets and a nice little rally going into him making a speech on TV. So we'll have to see if that plays out in future occurrences as he gets into his presidency. Couple odds and ends here, folks. You are seeing a little bit of a possibility of an intraday M pattern, although it's not a big one. And you can see here this little up move, down move, and then right here you got a little bit of a in spirit of bear flag off this monster gap down, or a gap down today and then monster sell off. The other thing I'd like to point out here is on your intraday chart, notice your move down into the 10 o'clock time frame, and again, we talk about this very, very often in these videos. You have to know your key level time frames, 10 o'clock, 10:30, 3:30, and notice the 3-bar sell right into 10 o'clock, then you get the bottoming tail. What does that signal? A nice move up in the intraday period. Now, the other thing you also want to keep in mind is you have to use your previous day's levels to note where the market's going, and by doing that, what I want to show you here is actually the lows from Friday, how they play out in importance today. And I'll take out these lines for now. But just notice this low right here, folks, okay? Draw that across to today. And again, that's from Friday all the way to across. And you can see how that's kind of a key level in the day. You came down, you pierced it, you had a bottoming tail, then you fought back above it, and ultimately kind of going back and forth on either side of that line until we broke down here after Obama was done speaking in his inaugural address. Now, the question here is the 20 moving average. You can see this 20 moving average as it slopes down on the intraday 10-minute is acting as a kind of a cap on the market. You can see you pierced it here once, you hit it here again, you hit it here and here. Ultimately, you're hitting it right now intra-candle, and you're not able to fight above that. If you break that, then you're going to look for this level as being the next area of resistance, the low from Friday. All right, so keep a watch. If you break through that 20, look at that level, which on the SPY seems to be about 83 or so on the SPY as the next area of resistance intraday. On the way up, then after you break through that, assuming you do break through that, you would get to the 50 moving average right around 83.65, which would be your next area of resistance, which is the 50 moving average intraday 10-minute. Now, a couple other key levels here, guys. Use the low from this point going back to Thursday on the pullback. Draw that across. What level do you get? You get the basic high right here and right here as well, which happens to coincide with the 20 moving average. So just notice how each of these lines that you're drawing across from previous days is also key. The other thing I want to draw your attention to is look at the gap down today. We closed up here, all right, right in this range right up here, and we gapped down to here. What does that coincide with? How about the gap up, the prior gap up gap window from Thursday to Friday? So notice this point coincides with the gap down, and we gapped below that. That's a bearish signal. In addition, notice the push up initially on this candle. Let me erase that so you can see. On the red candle, you pushed up right into the 20 moving average on the first candle of the day and the 50 moving average. Those two are key resistance levels. The market could not get above them in the first candle. You have to take that as an indicator that the market's going to be weak if it can't fight above those key levels, especially when you have to draw this across. That's a triple resistance line right here, from here over to this point, which coincides with the 20 and the 50 intraday. Triple resistance, the market can't get above it. What's going to happen? You have a sell-off right down into the lows from Friday and this point before you got that little bit of a bounce, and then now you're trading kind of in a sideways to slightly lower pattern for the rest of the day, at least so far. Notice in this current candle, folks, we pushed up, closed right below the 20, couldn't get above. Now you're seeing a little bit of a red candle develop on the intraday 10-minute. So we're going to flip over to the 60-minute now. So let's go to the 60-minute. And you can see that little bit of a M that I was talking about. But the one thing you want to keep in mind, folks, M's do not happen at the lows on charts. Notice how the tops are over here going back to the 5th and 6th of the new year here, 2009, January. And now you have at the lows of the chart this M pattern. That's a false M. Don't get skewed by that. Don't get fooled by that. It's not necessarily something you should be watching. I just more pointed out on an intraday 10-minute because it could play out on an intraday 10-minute, but on the 60-minute you have to refer to that as being a major time frame and go to that to kind of know when the bigger move is going to come. So you don't necessarily want to believe that on the 10-minute more than a scalp play here, but when you flip to the 60-minute, you see that it's not at the highs of the chart. If the M was up here, or something like that, then you look for that MA pattern and the drop, ultimately. But at the lows of the chart, you don't necessarily want to look for that. Now, going back here, guys, notice the key level. Take this low of this candle and draw it across. What do you get? The low of the day today, okay? So just look at that and note that. And again, let me draw that in for you all. The second, if that breaks on the 60-minute, folks, and so far it's holding this low here, which is right around that 82 level on the SPY. If that breaks, then you have to look to the lows from last Thursday to be the lows that are going to get tested at that point. So keep watching of that low, and these are the two key levels on the downside right now. On the upside, you still want to focus in on this level on the 60-minute here, and drawing that across. You can see you've been piercing it on the upside almost every candle, but you haven't been able to close above it. If you close above that key line right here on the SPY of 83, 83.10, right around that level, then look for the 60-minute chart to hit the 20 moving average at around, let's take a look here, that would be right around 83.60, which again coincided with a key level on the 10-minute chart we just talked about, okay? So keep that in mind, folks. That was the 50-minute right here, which was 83.60 as well. So they're both coinciding on both time frames. That should give you a good indicator if the market starts to break up where it's going to go and meet major resistance. All right, so again, you can see the market having fallen a bunch last week, but the key reversals from last week are in place. The question is now, do we hold the lows from that reversal? You break those lows, and on the daily chart, then we have to start talking about some more moves down. As of now, you have to assume that the lows will hold here because they haven't been broken, they haven't been closed below or confirmed, and at that point you want to anticipate a possible up move off these key supports, at least for a near-term bounce in the markets. Okay, folks, just going back to the market one more time, let's do a quick market check here and talk a little bit more about some odds and ends. The Dow is now down 185 points, so we've dropped a little bit. And again, as we talked about on that intraday, we said you know if you're coming into resistance here on this 20 moving average. Now look at that candle on the downside. So you're going to come actually into support now on the downside right around here. If that breaks, then you start to look for this lower level from last Thursday to be tested. It'd have to get a close below that and confirmation, though. Don't get fooled by the little whips here, as they might break it briefly and then scamper right back up. But again, the market is selling off here a little more. You do have the Dow down 185, NASDAQ down 60, and the S&P down about 27 on the day. Last but not least, folks, just a couple reminders. Come join the Research Center for all your up-to-date pivot levels, support levels, resistance, all your key turn dates, as well as stock analysis, gold, oil, all the levels that you're going to want to know are going to be in that, as well as educational videos and hidden gem reports. And even debuting probably this week, we'll have the pro trader watch list from all the pro traders in the money stocks. We're compiling their watch list every day, and it'll be updated every day. So you're going to have their watch list, what they have in front of them at the start of the day, every day, will be in front of you now if you join the Research Center. Okay, folks? And again, watch, there's a webinar February 7th. Join that to learn all the key levels and how to calculate them for yourselves. And again, have a wonderful day. Check back tonight for the Research Center video in the Research Center this evening. Take care.